So I just started recording. Today I wanted to work a couple, actually I'll probably try to work 3 example problems from the end of chapter 7, things that will help you for the exam. So I'm going to share my screen right now. You should be able to see my screen. And then we're going to go, let me, how do I get rid of this? We're going to go to the ebook. There we go. All right, we're going to go to the ebook and we're going to work some exercises here. The first one I wanted to work was exercise 7.3a. There's going to be several problems on exam 2 in regards to preparing bank reconciliations. So I figured we should do a few of those. Can everyone hear me fine? Can you guys hear me?
Yes, we can.
Thank you, Madeline. All right. What does it say here? It says use the following information to prepare a bank reconciliation for Fast Company as of June 30th. So they give us, this is a sort of an easier one. They give you the unadjusted cash balance, which is the balance in our cash T account that we have at the end of the month before we do any adjustments. And then they give us the unadjusted bank balance, which is the balance that our bank statement says is in our cash account as of the end of the month. And you can see the two numbers don't equal each other because we haven't made adjustments yet. There's reasons why they don't equal each other. And we're going to talk about that. So the first thing in preparing a bank reconciliation, if you're looking at if you guys are seeing what I'm writing here, let me know if you can't see my screen. Before I do this, could you all, I can hear background noise and it's a little bit distracting. Could you all mute your mics? And you can unmute your mic if you have a question. Just unmute it and let me know what your question is if you have a question. Please mute your mic so it's not so distracting. Thank you, guys. All right. Bank reconciliation. Let's prepare one. So name of company, Fast Company. And it's as of June 30th. And this is a bank reconciliation. If you just came in, I think it's Joe. Can you mute your mic, please? I can hear background noise and it's distracting. Whoever doesn't have their mic muted, please mute your mic. If you have a question, you can unmute it and ask the question. All right, so we got this. So what we do is there's essentially 2 columns to the bank reconciliation. The left column, we're going to start with the unadjusted bank balance. The balance that the bank says we have in our cash account. Where do we get that? We get that from the bank statement at the end of the month. The bank statement will be mailed from our bank to the internal auditor within our company, the internal audit office. The internal audit office is the one that gets the bank statement and then prepares the bank reconciliation. So we're going to start with the unadjusted bank balance. So the unadjusted bank balance, according to the problem, is it's a number 2. The balance per the bank statement as of June 30th, $7,235.85. And then on the right side, we're going to have our unadjusted book balance. What is the unadjusted book balance? This is the balance that we show in our cash T account. So if you imagine a cash T account, June 30th, the ending balance, what does it say? It says $7,015.40. May not have given myself enough room. All right. So we have these two columns. And now you can adjust the book side first, or you can adjust the bank side first. It doesn't matter. This is the bank side over here. This is the book side over here. Doesn't matter which adjustment you do first. Let's do the bank side. So to adjust it, we have to look at the information given. So number 3, deposits not reflected on bank statement, $975. So these represent checks that have been written to us by our customers to pay off their account, but we haven't deposited the checks in our bank yet, either because we haven't received the check yet, or we have received the check and we're just holding it. We got the check like on June 29th or June 30th, and we haven't had time to go put it in the bank yet. So these items we've already recorded in our cash T account. In fact, we probably have received these checks because we wouldn't have recorded it in the cash account if we hadn't received them yet. So we've received these $975 worth of checks. We've debited cash and we've credited accounts receivable, but the checks haven't gone into our bank yet, so they don't show up on the bank statement. So these are known as deposits in transit. We need to add these to the unadjusted bank balance, because when we put them in our bank, we're going to get an addition of $975. So to adjust the bank balance, we're going to have to add that. So add the deposits in transit. They're known as deposits in transit. The checks are still in transit. They haven't reached our bank yet. Why? Because we're holding them. The customer mails the check to our PO box that we have set up for them to mail checks to, and we haven't cashed or deposited the checks yet. Number 4, outstanding checks. As of June 30th, they total $1,260.45. What does that refer to? That refers to checks that we've written to people that we owe money to, like our suppliers, for example. But the checks haven't reached the supplier, the person that we owe yet. You know, when we write a check and we send it in the mail to pay for something, that check, the amount of that check doesn't come out of our bank account until the other person gets the check, takes the check to their bank, and then their bank, sends an electronic message to our bank saying, hey, take that money out, transfer the money to our bank, to their bank. So that hasn't happened yet because these checks they're outstanding. So they haven't shown up on our bank statement, but they will show up. They'll show up next month and there'll be a deduction. So we're going to go ahead and deduct those. So we're going to subtract outstanding checks, $1,260.45. Okay, whoever is typing and they don't have their mic muted, please mute your mic because I can hear it and it's distracting. You can unmute it if you have a question and ask me. No worries, it's fine. Just mute your mic so I don't hear that. So outstanding checks, subtract $1,260.45. And then finally, 5 is something that's already on our bank statement, so we don't have to make any adjustments to the bank balance for that. 6, our bank made an error. It said error by bank. Your Tel company check charged on Fast Company's bank statement. We're Fast Company, as you see up here. So some other company who does business with the same bank that we do business with, they wrote a check and the bank made an error. They took the money not out of that company's bank account, but they took the money out of our bank account. They took out $375. So we have to add that back. So this should be a subtraction, so I should have put parentheses around that, and then this is an addition, $375. This 375 is not in this number. Otherwise, they wouldn't have told us there was an error. All right, so those are the only adjustments we need to make to the bank side of the bank reconciliation. This number 7 is something that we've done. We wrote a check for $260, and that was what we put on the check, and that cleared our bank, and that's in our bank balance number already, but we incorrectly recorded it in the books. So that's something we need to do to the book side. So we've these are the 3 adjustments we need to make to our unadjusted bank balance. And so our adjusted bank balance will be $7,235.85 plus 975 minus 1260.45 plus 375. And you should get 7,325.40. So $737,325.40. And this is our adjusted bank balance. Now we're going to go on the book side and we're going to take the unadjusted book balance, make some adjustments to that, and get the adjusted book balance. The adjusted book balance should equal the adjusted bank balance. They should equal each other. That's how you can check yourself if you did everything correctly. So which things have we not adjusted? We haven't done anything with number 5 or number 7, right? 3, 4, and 6 were adjustments we made to the bank balance. 5 and 7 are adjustments we're going to make to the book balance. So number 5, service charge on bank statement, not recorded in books, $50. What is that? A service charge, it's a fee that our bank charges us for doing business with them. You know, some banks charge fees for doing business. And the fee that this bank charges our company per month is $50. And we don't know what that fee will be until we see our bank statement. That fee could change, you know, depending on things. It might not be exactly 50 every month. So we wait till we see the bank statement, we see the $50, and then we got to subtract that. So we're going to subtract service charge. $50. Put it in parentheses to indicate subtraction. And then the final adjustment we need to make is number 7. So here we wrote a check for advertising expense, $260. So we wrote $260 on the check, which was correct. But then we recorded that we wrote the check for $620. So in the books, we credited cash for $620. We debited advertising expense for $620. But we should have credited cash for $260 and debited advertising expense for $260. The key is we credited cash for too much. So we need to add back the error. What's the error? The error is 620 minus 260. So 620 minus 260 is $360. So we've credited cash. We've taken out $360 from our cash account too much. We need to add that back. So add back the book error. And those are the only adjustments we make to the book balance. So we've taken care of all 7 things here. And well, we can go ahead and do it here. The adjusted book balance. If you take $7,015.40, you subtract $50 and you add $360, you should get $7,325.40. So that's the adjusted book balance. The adjusted book balance, the adjusted bank balance equal each other. You haven't made an error. One other thing I want to say about this book error. Notice the nature of the error. Look what the error was. Instead of 260, we recorded 620 in our books. It's called a transposition error, right? We just transposed the 2 and the 6. Transposition errors are often easy to catch. Look what the error is. 620 minus 260, the error was $360. $360, when you divide it by the number 9, you get an integer. So the key thing about transposition errors is they're always divisible by 9. It's just a mathematical fact. The book actually points that out in a little blurb. You might not have read that in the chapter, but in chapter 7, it talks about that. All transposition errors are divisible by 9, which means when you divide the error by 9, you get an integer, not a decimal number. So that is something that you can check. If you're off by a factor of 9, it's likely a transposition error. So don't forget that. I don't know if that'll show up on an exam, like that question, but just in general, in the future. And I could prove why all transposition errors are divisible by 9, but that's outside the scope of the class. Just know that they are. They're evenly divisible by 9. All right, so that's exercise, I didn't even label it. Exercise 7.3a. Now, if anyone has any questions on what we just did, you can ask right now. That would be a good time to ask. If not, I'll go ahead with the next ones. Any questions on anything we did? All righty. The next one I wanted to look at is problem. Yes.
I'm
Question.
sorry. Can you just repeat the transactional error? If you're off by a factor of 9, it's a transitional error.
Transposition.
Okay.
I'll write it. Not transitional. I'm writing it on the screen right now. Transposition errors are always evenly divisible by 9, which just means when you divide the error by 9, you get an integer, not a decimal. So here's an example of a transposition error. You wrote a check for $254, but then you recorded in your books that you wrote the check for, say, $272. The error is $18. No, that's not a transposition error. That error is 18 and it's divisible by 9, but it's not transposition. You recorded in the books that you wrote it for $245. There's a transposition error, right? You just transposed the 4 and the 5. The error is $9, right? You recorded 9 less than what you should have recorded, and 9 is obviously evenly divisible by 9. All transposition errors are evenly divisible by 9. Here's another example, say 2,345, but instead you record 2,435. You transpose the 3 and the 4. The error, the difference between these two numbers is $90, and 90 is evenly divisible by 9. All transposition errors are evenly divisible by 9. So that's what I had said. Does that help?
Yes, thank you.
You're welcome. Any other questions on what we've talked about thus far? Okay. If you have anything along the way, just pipe in, no problem. If you interrupt, that's fine. The book also talks about, before we do the next problem, the book also talks about, actually, I'm sharing my screen now so I can go to the book. Let's go, I'm gonna open up a new tab. There's also an interesting fact that I wanna let you guys know about. It's in the book, but a lot of you may not have read the chapter. You might have read the chapter, but you might not have read the all the little blurbs in the chapter, like little side notes. It's in one of those side notes. I'm trying to find where it is. I'm just going to go through the chapter here. It's towards the beginning, I believe. Is it there? No, it's not there. Just bear with me here. Here it is. This little blurb, it's on page 330 in chapter 7. It's called Benford's Law. And this law was used to catch a fraudster. So the idea here is this guy named Benford came up with this, this fact that if you take a set of numbers and you look at the first digit of each number in that set of numbers, the first digit is more likely to be a 1 than it is to be a 6. And in fact, that we have 9 digits, not counting 0, of course, 1 through 9. And here are the probabilities that the first digit of a given number in a set of numbers is a 1, 30%, a 2, 17.6%, and so forth. He was the first person to notice this. And then another person, Mark Negrini, he applied this law to accounting numbers on financial statements. And he wrote this article that was published in the Journal of Accountancy called I've Got Your Number. And he offered a pretty logical explanation for why you would expect to see a 1 more often on financial statements as the first digit of a number. The numbers on financial statements are dollars, right? And the first number of any number on the financial statements is much more likely to be a 1 than it is to say be a 9, and he offers a good reason why. And you can read that here. So you kind of know about Benford's law. I don't think it shows up on the exam, but it's an interesting thing. And how did that help? How did knowledge of Benford's law help catch a fraudster? I believe it talks about it. I don't remember where it talks about it. It's in chapter 7, but the way they caught a fraudster with knowing Benford's law. This person, he worked for the athletic department at the University of, I can't remember, a big university out west. I think the University of Oregon. He's like one of the main people in their Department of Athletics. And he was writing checks to himself out of their money. Somehow he was able to do this. He had the access to be able to do it. And when authorities saw the dollar amounts written on the checks, he first started with a small dollar amount, right? Like $100 to see if he could get away with it. I think he wrote it for 99 bucks. And then he would write increasingly bigger amounts to himself. So then the next check he would write for, say, $999. And then he would write one for $59,999. And what the authorities noticed is that all the checks he wrote, the first number of the check was very rarely a 1. It was usually an 8, a 7, a 9. And they had a sample, I think he wrote 28 checks. And the number 1 or the number 2 as the first number on the check appeared like twice, which violates Benford's law. I mean, a 28 check sample is a big enough sample to be able to apply Benford's law to. Benford's law says the number 1 should appear as the first number in a given number. It should appear 30% of the time. And it appeared on those 28 numbers, those 28 checks, it appeared twice, not 30% of the time, right? Twice out of 2 divided by 28. That's the probability that the proportion that it appeared. And the numbers 5, 7, 8, 9 appeared. I think like 25 out of the 28 checks started with a 5, 7, 8, or 9. So the guy, he didn't want to write a $100,000 check to himself, right? He would write like 78,999 or 99,000. He thought he was being clever with numbers. Ironically, he thought he was being clever with numbers by making sure that he didn't write too big of a check so people would notice $100,000. But ironically, people notice that he was committing fraud by the pattern of the numbers that he was writing checks for using Benford's law. Obviously, he didn't know about Benford's law. But anyway, hopefully you guys understood what I said there. I thought it was pretty interesting. Anyway, let's go back to chapter 7. Let's work problem 7.3a. So we just did exercise 7.3a. Let's do problem 7.3a. All right. Back to business here. Problem 7. Right here. Internal controls for cash received on account. So you should know, I believe it's exhibit 7.1 in the chapter. It describes, I'll go to it in the chapter. It describes, it's a summary of the internal controls that companies have over cash received on account. Companies have, here it is, exhibit 7.1. Companies have developed an elaborate system of internal controls to help safeguard cash, because cash of all the assets is the most liquid and it's the easiest to misappropriate or embezzle or steal, if you will. And so they've developed, they've gone to all lengths to try to prevent cash from being stolen from them by their own employees, by outsiders. So you should definitely know exhibit 7.1 in detail. Exhibit 7.1 describes this system of internal controls that are put in place to help prevent cash from being stolen. And cash includes checks, things of that nature, of course. So when I say cash, I don't necessarily, I mainly mean the checks, not necessarily actual, dollar bills. All right, so let's go to this problem here. It says Blue Company sells plumbing supplies to plumbing contractors on account. The procedure that Blue uses to handle checks received from customers via the mail are described below. So Blue instructs its customers to send their checks to its street address, not to a separate PO box, but to its main mailing address. Let's see what's required. It says indicate how Blue Company could improve each of these procedures. Refer to exhibit 7.1 in the chapter to help you generate ideas. So for part A there, Blue says customers send your checks to our main address. And their main address receives mail from everyone, not just customers sending checks in, but all other mail comes to their main address as well. And so if you look at exhibit 7.1, one of the things that, I don't know if it talks about it in this exhibit, but it talks about it in the blurb leading up to the exhibit. Basically, let's see if I can find where it says it, maybe the page before. Yeah, a company often sets up a separate post office box, and they request that its customers mail any cash payments on account to that post office box. All other mail and company correspondence are directed to another company address, like their main address. And so the problem here in part A is Blue should set up a separate mailing address designed only to receive customers' checks that are paying off their account. It helps them to keep, hopefully you see how that is an internal control feature that would help mitigate. It's more likely for a check to, if the company has all the checks just mailed to their normal mailing address, it's more likely that something's going to go wrong. They're going to misappropriate. They're going to not necessarily more likely something's going to get stolen, but it's harder to keep track of the checks because they have all this other mail. And if something was stolen, it'd be harder to figure out what, than if they have one mailing address designed only to get cash payments from customers on account. So the thing they should do in Part A to improve it is they should set up a separate mailing address for customers to mail their checks. All right. B, Blue does not provide a remittance advice to its customers for return with payment checks. So what that means is, if we go look in the chapter again, so in the mailroom, when the employees receive the customer's checks, which are hopefully paying off the customer's account with the company, they open the envelope, and each customer's envelope that comes in should contain, obviously, the check. It also should contain a remittance advice. The remittance advice is something that the company already mailed to the customer, or it was online and the customer had to download it. And the remittance advice is a form that accompanies the check, and it informs the company who receives the check about the purpose of the check. So it has the customer's name, the customer's account number. It has the amount that the customer is supposed to pay. That way we can see if the amount on the check, which is what the customer paid, equals the amount on the remittance advice, which is what we told them that they needed to pay us to pay off their account. If they don't equal, then they haven't paid off their account yet, right? And so in Part B, Blue should provide a remittance advice to its customers. Customers are to return that remittance advice filled out completely with the check that they send to the company. So this helps to guard against, keep track of, for a given customer, have they paid off their account yet or not, or how much of their account have they paid off? Do they still have a balance with us or not? All right, Part C. In Blue Company, checks are endorsed by the Treasurer's office just prior to sending the checks to the bank for deposit. If we look at Exhibit 7.1, what happens is the mailroom employees, they get the checks and they get the accompanying remittance advices. They're the ones who are endorse the check. And when they endorse it, they put for deposit only on it. They write the words for deposit only. That way it's clear that no one can cash that check. The check can only be deposited in the company's bank account. So they're the ones who should endorse the check. Then they send the checks and the remittance, they send the checks to the treasurer. The treasurer is the one in charge of custody of the asset. The treasurer gets all the checks. They've already been endorsed. The treasurer doesn't endorse them. The treasurer prepares a deposit slip. Deposit slip is just a slip that goes to the bank that accompanies whenever the treasurer, whenever the treasurer takes the checks to the bank to deposit them. The bank also requires a deposit slip, which basically summarizes the total, each check, and how much is being deposited. So the treasurer will prepare the deposit slip. And they're the ones that take the deposit slip and the checks to the bank. They send a copy of the deposit slip to the controller's office, and they file a copy of the deposit slip. They keep a copy for themselves, and they send a copy of the deposit slip to the internal auditor as well within the company. The controller gets the deposit slips. The controller is just in charge of recording. They're the ones that make the journal entry to show that the customer paid off their account. So they're the ones that would debit cash and credit accounts receivable. The treasurer is in charge of custody. They don't get to do any recording. The controller is in charge of recording. They don't ever have physical custody of the asset. Nobody in the controller's office gets to have the checks. Or the checks are already deposited in the bank. So the controller just compares the deposit slip that they got from the treasurer to the remittance list, which summarizes the remittance advices that they got from the mailroom, right? The mailroom sends a remittance list to the controller, and then the treasurer will send a deposit slip to the controller. The controller compares the two things, right? If there's some check that's not on the deposit slip, but was on the remittance list, then the controller can see that and ask the treasurer, what happened? Why isn't this check on the deposit slip? Did you keep it? Are you keeping it for yourself? Because it was on the remittance list that the mailroom employees made. You see what I mean? So you can see there's control there. Anyway, to answer part C, the treasurer's office should not endorse checks. That should be done by the mailroom. D, the mailroom prepares a remittance list of all the checks received and files the only copy of the remittance list in a mailroom file cabinet. No, that shouldn't happen, right? The mailroom should prepare a remittance list, which summarizes all the remittance advices. And they should send that remittance list and the remittance advices to the controller. That way the controller can compare to see if the remittance list and the remittance advices are the same in total, to make sure the mailroom did their job. So they shouldn't keep a copy, the only copy of it in, they shouldn't keep the remittance list. They should send it to the controller, basically. So the mailroom should send the remittance list to the controller. All right. Part E, the checks are sent to the controller's office. The controller's office uses the checks to post the accounts receivable, to make the journal entry. The checks are then sent to the treasurer's office. No, that's not good, right? The controller's office is in charge of recording only, not custody. One of the key features of good internal control within a company is segregation of duties, which means you don't want the same people. You don't want one individual in charge of both custody and recording, right? You want to segregate those duties. So the controller's office, those people are in charge of recording. And the treasurer's office, they're the ones that have custody of the asset. They have custody of the cash, of the checks. So the check should never be sent to the controller's office. The mailroom should send the checks to the treasurer's office. So, because if the controller's office gets the checks and they make the journal entry, they're in charge of custody and recording, then there's much higher chance of fraud happening, right? They could record that they got something that they really didn't get. Or they could record, they could record that they got $300 of checks, which they may have really gotten, and then they send $200 of checks over to the treasurer's office to be deposited, and they keep $100 of the checks. So they recorded correctly. They kept 100 for themselves, though. The treasurer wouldn't even know that they were only sent 200 out of the $300 of checks. So that's why that would be poor internal control. Part F, treasurer's office, and I'm not writing these things down, but the solutions I have put on Blackboard already for this problem and for the ones that we're doing today. The treasurer's office prepares the deposit slip and sends one copy and the checks to the bank. The other copy is filed in the treasurer's file cabinet. Okay, everything was good in the first sentence. The second sentence, though, they need to send a copy of the deposit slip to the treasurer's office. That way the treasurer can compare the deposit slip they get, to the controller's office. That way the controller can compare the deposit slip they get from the treasurer's office to the remittance list they get from the mailroom to make sure the checks on the deposit slip are the same as the checks on the remittance list, which means that the treasurer's office haven't kept any checks for themselves. Because the deposit slip is what goes in the bank, right? And then G, the bank statement is sent to the controller, who prepares the bank reconciliation. Well, if you look here in Appendix 7.1, that shouldn't happen. The internal auditor should receive the monthly bank statement directly from the bank through the mail. The internal auditor, the people who work in the internal audit office, they don't work in the controller's office. They're different from these people, and they don't work in the treasurer's office. They don't work in the mailroom. They never get the checks. They never record for the checks. They get the monthly bank statement, and they get the information from both the treasurer and the controller, and they're the ones that make the bank reconciliation. So the bank statement should be sent to the internal audit team. All right, that completes that problem. Are there any questions over problem 7.3a?
Yes, could you please go over E?
E, the checks are sent to the controller's office. The controller's office uses the checks. So they look at the checks, and they're the ones, like they have a check from customer A for $500, and they're the ones that say, okay, debit cash 500, credit accounts receivable for customer A 500. There's a problem. The controller's office is doing the recording, and they're also having the physical custody of the checks. So that's a problem, right? They could record the $500, and then, which is right, but then they could keep, they could go and cash the check or deposit $400 of the check into the company's account and keep 100 for themselves. So you don't want the same people who are in charge of recording for the asset also have custody of the asset. You want to segregate those duties. So the check should be sent to the treasurer's office. The mailroom gets the checks. They should send the checks to the treasurer's office, like it says in Appendix 7.1. See? Mailroom sends checks to treasurer. Controller never actually gets the checks. Treasurer makes a deposit slip, and they take the deposit slip and the checks to the bank. Then they send a copy of the deposit slip to the controller. So the controller has the deposit slip. That's basically that's a summary of all the checks made by the treasurer. The mailroom also makes a summary of all the checks that they receive. That's called a remittance list. The mailroom sends a remittance list to the controller. So then the controller can compare the remittance list to the deposit slip, right? If there's a check that's on the remittance list but it's not on the deposit slip, that means the treasurer kept that check for themselves, right? They didn't put it on the deposit slip. So the controller can catch that. So hopefully this makes sense. Checks should be sent to the treasurer's office. Does that make sense?
Yes, thank you.
You're welcome. I know this internal control over cash is a little, it actually requires, you have to think, you have to think about it. And it's harder, this is actually a little bit tricky to think about. And you know how companies discovered this whole system of internal control? How do you think they discovered it? They discovered it by being defrauded. They didn't have this system in place, and money was stolen from them, and they figured out how it was stolen, and they realized, oh, if we do this, then it's much less likely that it'll be stolen from us. Like the company might have had one person getting the checks and doing the recording. And then, of course, fraud happened, and they realized, oh, we need to separate those duties. And so it all led to basically this. This is what most companies do in terms of cash, in terms of receipt of cash on account through the mail. Any other questions? About this problem? On the exam, there isn't a huge focus on this. I think there is at least one question on this though, where you have to kind of it's more of a qualitative question. You're not calculating anything like a bank reconciliation, but you are it's kind of like this question where you have to think, what's the right internal control or what's the wrong internal control. But it's not a heavy focus on exam 2. But because there is at least one question on exam 2 about that, I added a problem in our practice problems where you can practice that. Basically, if you know exhibit 7.1 in the book, if you really know this inside and out, and you also know exhibit 7.2 in the book, then you're good for those type of questions. Exhibit 7.2 summarizes the internal controls. It's a smaller exhibit, but it summarizes the internal controls over cash received from retail cash sales. So not cash received where customers are paying their account off through the mail, but cash received from customers in a retail setting, like at Walmart, like at a cash register. What are some internal controls that can safeguard, make sure that the person working the register doesn't steal any cash, for example, things like that. So that's what exhibit 7.2 is about. If you know exhibit 7.1 and exhibit 7.2, and you really know it, those 2 exhibits, you'll be able to get any questions like this right. If there aren't any other questions, we will go and do the final problem that I wanted to do today, which is problem 7.5a. It's another bank reconciliation, but it's a harder one. And I wish it was all on one page because I had to keep flipping back and forth, but that's fine. So we did this. I didn't write the answers because I was talking about them. Answers are on Blackboard though for that problem. All right, problem 7.5a. We're doing a bank reconciliation. The company is Thurman as of August 31st. So we can go ahead and write this here. And let's see, bank reconciliation. All right, again, there's 2 sides. There's the bank side, which we're going to put over here, and then there's the book side, which we're going to put over here. So we'll start with the unadjusted bank balance. And then over here, we'll have our unadjusted book balance. All right, let's go to the problem. Okay, I see. I didn't read the problem. This bank reconciliation is going to be as of the end of September. That'll be apparent here in a second. So it says the bank reconciliation that they made for August, as of August 31st, showed a deposit in transit of $1170. So as of the end of August, there was a check written to the company by a customer for $1170 that hadn't cleared the company's bank yet. So that check was on the bank reconciliation for August. And there were 2 outstanding checks. Check number 597 for $650 and check number 603 for $710. So these 2 outstanding checks, these are checks the company has written, Thurman, and as of August 31st, the checks haven't cleared the person that they wrote the check to. They haven't cleared their bank yet. And so it hadn't shown up on our bank statement. So that's why we put it on our bank reconciliation as of end of August. All right. The reconciled cash balance on August 31st was $14,110. So that's the adjusted book balance on August 31st. And of course, it's also the adjusted bank balance because the 2 have to equal each other as of August 31st. All right, that's the previous month. Now it says they give us the bank statement for September. Here's the bank statement for September. So this question is harder because in the previous question with bank reconciliation, they basically just summarized the pertinent information on the bank statement that we needed to know. They didn't give us the bank statement. They just summarized it in words and told us, here's the adjustment you need to make, basically. But in this problem, they give you the whole bank statement and you have to figure out what adjustments. That's why it's harder. So here's the bank statement for September. So our bank says that at the end of the month, our cash balance is right here, 13,973. That's our unadjusted bank balance. It's what our bank statement says we have in our cash account, 13,973. So here's a bank statement. Over here, obviously those are the dates. These are all the deposits, all the checks that went into our account during September. Over here, starting right here and going over here, these are all the checks we wrote. So these are checks that came out of our, this is money that came out of our account. And these are the check numbers, including a not sufficient funds check. No, that's different. All the way down until from 597 through 614, these are all the checks we wrote. So this money all came out of our account. NSF, a not sufficient funds check, the bank is letting us know about, 991. What this is a check that a customer has written to us to pay off their account. And when they did that, we debited cash for 991 and we credited accounts receivable for 991. But the bank is letting us know that this check, actually the customer, when the check tried to clear our bank, the customer in their bank account, they didn't have enough money for it to clear. They didn't have not sufficient funds. And therefore, we really haven't received that money. The bank's letting us know you haven't received this. So we're gonna have to add this back to our book balance. It's already taken care of on our bank statement. But an NSF check, you always add back to the book balance. Anyway, and then this SC is a service charge. A service charge is obviously, we talked about that last time, it's a charge that the bank charges us each month for doing banking with them. So they charge us $36 this month. And these other codes here, I don't see any debit memos or credit memos on here. A credit memo would be something like the bank collecting a note receivable for us. That would appear over here. And often when they do that, they charge a small fee for doing that. And that would be a debit memo, and that would be over here. We would have to take into consideration that charge. Right? A bank, we could lend money to someone, $300, and then we let our bank be in charge of collecting that money for us on our behalf. In exchange for doing that, the bank charges us a small fee. But that isn't on this bank statement. All right. Here's a list of deposits made and checks written during September. So up here is what happened in our bank account per our bank statement. Down here is a list we've made. This is like our checkbook, basically. This is like our cash T account. This is what we think we've done. This is what we've done according to our cash T account. This is our books, and up here is our bank. The cash. All right, what does this say here? So basically, our book balance for cash at the end of September is 14,386. So it does say cash in bank, but that's what our books say that our cash should be in our bank account, 14,386. Our bank balance, obviously, you get on the bank statement, which is, oh, I messed it up. Our bank balance is right here, 13,973. So that's where students can sometimes get confused. bank statement balance, that's our bank balance. If it says cash in bank balance, that's our book balance. That's what our books say that our cash should be in the bank. 14,386. We got our starting numbers. Now we need to make some adjustments. Let's do the bank side first. The adjustments that you always need to make to the bank side are, just remember, need to add deposits in transit. So are there any deposits in transit? All right. Well, the first one, let's check. As of the end of August, there was a deposit in transit of $1170, and that was on our August bank reconciliation. Is that still in transit as of the end of September? If it is, then it should also be on our September reconciliation. But I doubt it is. A whole month has gone by. Surely this check, we've put it into our account. I mean, surely we've taken it out of our pocket and gone and taken it to our bank. Surely. So let's see if that 1170 showed up on our September bank statement. It does. On September 1st, it shows up. It was the first deposit made. So that no longer is a deposit in transit. Are there any other deposits? Let's check for, are there any other deposits that could be in transit? To do that, we look at this right here. Here are the deposits that we say we made into our account. And what this means is we think customers have written us checks for these amounts, and we've gotten these checks. We've debited cash, we've credited accounts receivable, and we've taken these checks to our bank. But not all these checks will be on our bank statement, especially the one we took to the bank on September 30th. The bank still might not have processed it yet, so it might not be on our September bank statement. So all we have to do is check. Any check that's in this list that's not on our bank statement is a deposit in transit.
Professor,
Yes.
I don't think that anybody sees what you're doing with your mouse. So I think from what I'm seeing on the chats here that people can't see what you're doing with your mouse and they're getting a little confused maybe.
Okay. I'm trying to think of how I can fix that. I'm not sure how to fix that. Like, can you see this right here?
No.
Well, I'm waiting. Oh, you can't see that. Oh, okay.
No.
I need to plug in my mouse. See, the only problem is I only have one USB in this laptop, and I'm using that for my camera. But I don't need to be using my camera now. You guys don't need to see me, so I can unplug that and put my mouse in. Hold on, let me try something. Give me 1 second.
Sure.
I thought you guys could see when I'm moving my pen around on the screen, you can see it, because you can see when I write, but you can't see when I'm moving my pen around. I didn't know that. All right, thank you for letting me know. All right, I'm unplugging my camera because I don't think that's needed. And I'm plugging in a mouse. You should be able to see. Now, do you see a cursor on the screen?
Yes.
Okay, good. Great. All right. So back to what we were doing. We're trying now to find the deposits in transit. So to do that, here are all the deposits that we say we made according to our books. So any of these checks that we said we deposited into our bank that does not appear on our September bank statement is a deposit in transit. So basically we just have to go find each of these on our bank statement. And any one we can't find on the bank statement is a deposit in transit. So the 1120 that we said we put into the bank on September 1st, does it show up on our bank statement? Yes, it shows up On September 2nd, the bank put it into our account. The $850, we went on the 4th and put it into we went and gave it to our bank on the 4th. They put it in on the 5th. There it is. The $744, we gave it to the bank on the 8th. It went into our account on the 9th, and so forth. You see what I'm doing here? It looks like all the checks in our books are in the bank, except for this last one right here. This 1266, we took it to our bank on the 30th, but it hasn't cleared our account, which means the bank hasn't processed it yet. So it's not on our bank statement. So we're gonna have to add that to our bank balance. So we're gonna have to add that over here. So what was it, 1266? 1266 is the only deposit in transit. And then the next thing we want to do is we want to subtract the outstanding checks. These are usually the only two adjustments you make to the bank balance. You add the deposits in transit and you subtract the outstanding checks. The only other adjustment you would need to make is if the bank made an error, which usually doesn't happen. It happened in the problem that we did up here, right? We had error by bank, but usually banks don't make errors. So usually it's just two things here. We want to subtract the outstanding checks. All right, what are the outstanding checks? Let's go back to the problem. Go back to the very beginning of the problem. It said at the end of August, 2 checks were outstanding. So there are 2 checks that didn't show up on our August bank statement that we had written. And so they were on our August bank reconciliation. Check number 597 and 603 for $650 and $710 respectively. The question is, as of the end of September, have these checks shown up yet on our bank statement? If not, then they're still outstanding. Whoever we wrote these checks to, they have it in their pocket and they still haven't taken it to their bank, so it hasn't cleared the system yet. If it hasn't cleared, if they haven't taken the check to their bank, then it definitely, their bank hasn't taken the money out of our bank. So the question is, are these checks on our September bank statement? 597 and 603. Here are all the checks that came out of our account. Yes, 597 is there, that came out, but check 603 is still outstanding. It still hasn't come out. Whoever we wrote that check to, what did we write that check for? How much money? We wrote it for $710. Whoever we wrote that check to, they have that check, they have it in their pocket or wherever they have it, and they haven't taken it to their bank yet. And it's causing us all sorts of trouble trying to consolidate things. But anyway, that's a deposit that's still outstanding, or that's a check that's still outstanding. It's check 603 for $710. You know what I should do here to make this, I should label this. So check number 603 for $710. That's an outstanding check. I mean, that check is going to clear our bank, and when it does, it's going to come out of our account. So we need to subtract that. All right. Well, let's go to find more outstanding checks. All right. For the other outstanding checks, we're going to look at this list. Here are all the checks that we've written during September according to our books. And the question is, have all these checks cleared our account? So we need to find which of these checks are not on our bank statement for September. So this first check, 607, there's check 607 right there. Is 608 there? Yes, 608 is right there. Is 609 there? Yes, 609 is right there. Is check number 610 there? Yes, check number 610 is right there. 611 is there. 612 is there. 613, I don't see 613. There's a gap here. So 613 is outstanding for $310. 614, we wrote it, and it cleared our bank. 615, we wrote it, it hasn't cleared our bank, that's outstanding. 616 is outstanding. So we need to add those are both outstanding, 615 and 616. How much was check 616? $420. And so when we take the unadjusted bank balance, we add the deposits in transit, we subtract the outstanding checks, we get the adjusted bank balance of $13,413. That's the bank side. Let's go to the book side. The book side starts with a balance of $14,386. What adjustments do we need to make to the book side? Well, we're going to have to make an adjustment for this NSF check. We're going to have to make an adjustment for the service charge. We're going to have to make an adjustment for this stuff. For this stuff that they talk about right here in this line. So it says, in reviewing checks returned by the bank. Because you know, your bank, if you write a check, I don't know if you guys write checks, but if you write a check to someone, that check goes to that person, they take that to their bank, that their bank sends that check back to your bank. Your bank sends the money to their bank, and then your bank sends that check back to you. Eventually it comes to you, and it shows that it cleared. So when the company's reviewing checks that have been returned to them that they wrote, the accountant discovered that check 612, which was written for $817 for advertising expense. So 612. Okay, I'm trying to, okay. Check number 612 written for $817 for advertising expense. It was recorded that it was written for $871. Right here is recorded $871. There's a transposition error, right? They transposed the 1 and the 7. The difference between 871 and 817, if you take that difference and you divide it by 9, you get an integer. Remember, transposition errors are evenly divisible by 9. But we don't have to figure that out because they tell us, here's the error right here. So we're gonna have to make, so what we did for this check is we credited cash 871 and we debited advertising expense 817. But we should have done the journal entry for we debited advertising expense for 871, we credited cash for 871, but the journal entry should have been for 817. So we took out, what's the difference between 871 and 817? $54. We took out $54 more dollars out of cash than what we should have. So we got to add that back. So we'll add back the $54 book error. A check we wrote for 817 but recorded for 871. 817 is what cleared our bank, not 871. What cleared our bank is what we wrote the check for, which is this. So that's one thing. Then it says the NSF check for $991, which Thurman deposited on September 24th, was a payment on account from customer D. Walker. So our customer D. Walker paid off their account. They wrote us a check for $991. We deposited it, but the bank let us know that that check, that the customer didn't have that money in their account, which means which means that we've already put it in our books that we received it. We've debited cash for $991. But the bank's telling us the customer didn't have that money in their account. We've debited cash for $991 and we've credited D. Walker's account receivable for $991. But now looking at the bank, we say, oh, they didn't have that money in their account. We look at our bank statement. So they really haven't paid off their account. They still owe us $991. So we've debited cash for $991, but we shouldn't have. So we got to go subtract that. So you always subtract NSF checks from the book balance. NSF check always means that a customer of you has written a check to you and they didn't have money in their account for that check. It always means that. It doesn't mean that you wrote a check to them and you don't have money in your account. If that's the case, it would say overdraw. So we're going to subtract the NSF check from our book balance. And then the only other thing we have to do is this bank service charge. There's a service charge here. It's on our bank statement. So that's not on our books yet. $36 they've charged us just for doing banking with them for the month of September. They charge a monthly fee. So we need to go subtract that from our book balance. And so when we do these calculations, take our unadjusted book balance, add the book error, subtract the NSF check, subtract the service charge, you should get the adjusted book balance of 13,413. All right, now I see what's going on. I see a bunch of chats. And I haven't been looking at them. Oh, you guys are putting your numbers in. Okay, that's fine, that's fine. Now I see how I didn't realize I could see the chats this way. All right, anyway, that is this problem. Well, we haven't finished though. We did part A. In part B, we need to prepare the necessary journal entries to bring our cash T account into agreement with this number. So that's pretty easy. So this is part A. Part B, we just need to make the journal entries for these things, these adjustments. This book error, what's the journal entry for that? If we go back, we originally debited advertising expense for 871 and credited cash for 871. So we had debited advertising expense 871, credited cash for 871, but that was $54 too much. So we took out 54 too much from cash. And we recorded 54 too much for advertising expense. So we need to go back and put $54 into cash and take out 54 from advertising expense. This journal entry fixes the error. So that's that one we've taken care of. Now we need to make a journal entry for the NSF check. So I guess it's to fix book error. Now we need to make a journal entry for the NSF check. Again, the NSF check was D. Walker paid us $991, or we thought he paid us. So we debited cash $991 and we credited account receivable D. Walker $991. But then we found out D. Walker really didn't pay us anything because he didn't have enough money in his account to cover that check. So we got to undo that entry. Debit accounts receivable D. Walker $991. We set it back up. He still owes us $991 and credit cash $991. And then finally, the service charge. The service charge, you can just view that from the company standpoint as a miscellaneous expense. Maybe I need to put a description for this journal entry: to reinstate D. Walker's accounts receivable. And then the third one is, like I said, the service charge. You can just view that as a miscellaneous expense from the company's perspective. So just debit miscellaneous expense, credit cash. So these are the 3 journal entries. 1, 2, 3. For part B. Just a journal entry for each of these adjustments we made on the cash, on the book side of the bank reconciliation. Any questions on problem 7.5a? Do you have any questions? Solutions to this problem also are on Blackboard. So on Blackboard, I put the solution to this exercise, this problem, and this problem. What I'll probably do before exam 2 is I'll have a review session via Zoom, and you guys in that review session can ask me if you want me to do other problems from chapter 7, or obviously any of the chapters that are on exam 2, 5, 6, 7, 8. But that concludes what I wanted to do today in terms of practice problems. You guys obviously need to go study, do some problems on your own. If you want the solutions to other end of chapter 7 problems and they're not on Blackboard, because it's not one of these 3, just email me and I'll send you the solutions to whatever ones you want. Are there any questions in general?
I do have a question. When you're doing the lecture, Professor, can you see the chat that we have going on, the group chat?
I just realized I could here at the end, and I realized there's been a lot of messages, and now when I open it,
Well, I
yeah,
just
now I
was
see
a
it.
little concerned because, well, I don't know if there's something that you could do, but like in the big, towards the middle or whatnot of the lecture, I know that like some people had questions and maybe some people are just a little bit uncomfortable speaking directly to everybody in the class. So I was kind of trying to speak up for them, but maybe if you could just see the chat, you could see what the questions are. Just a thought. But
Yes.
I have no issues asking if somebody has a question, I'll read it and then I'll ask it for them. That's fine with me.
Thank you very much. From now on, whenever I'm doing this, now that I know how, now I can see, now I'm looking at the chat again. I'm new to the technology just like you guys are. From now on, I'll look at the chat as I get I kept getting notifications and I didn't know what they were, but it turns out they were people sending messages. And so what I can do is I'll make sure I keep up with that and answer the questions as we go. That way, like for example, I won't get 3/4 of the way through the lecture before I realize that people can't see my mouse. I'll know right away. I'll just check the chat.
Okay.
Somebody asked, can I mute everyone's mics? I can't do that. Only they can. I think I might be able to, but I don't know how to. It's easier if you guys just do that. I'm just looking at the questions again. Yeah. Yeah, I apologize. I'll do better going forward now that I know how to use this chat thing better. So you guys can keep using chat in the future and I'll answer your questions as you ask them. I'm sorry about that. Trying to look here. Anything else that I haven't really talked about? Yeah, if you guys need anything at all and you don't really want this whole group setting because you're uncomfortable, you just want to go one-on-one with me, just send me an email and we'll set up a Zoom meeting anytime you want to. I'll meet with you and we can talk about whatever questions you have. Are there any other questions? Thank you, Janelle, for acting as an intermediary.
No worries. Do you know that if when you stop this because you're the host account, will I still be able to see the chat? I'm trying to set up some sort of a thing with everybody. And I just can't write down the phone numbers fast enough. So once you end this session, will I still be able to see the chat? No?
No, but when I end the session,
Okay.
I will. Jackson said, take a picture.
Yeah, Janelle, do you have like a camera phone that you can just take a picture of the chat right now and then look at it after?
Yeah, I'm going to do that right now, guys. Hang on just a second.
Janelle,
There's an
at the
option
bottom.
yeah, there's an option to save the chat.
Oh,
is
yeah.
there?
I know I can save the chat, Janelle, and I can send you a transcript of everything that was said in the chat. I could just email it to you. But I think like he said, you can save the chat yourself.
Okay, I see. Yep. Okay.
Yeah, you see where it is. Yeah.
Thank you.
Yeah, thank you guys for being patient with me, helping me out with this technology as well. You guys are pretty good with technology. So I'll next time, whenever it comes to questions, I'll ask them as they come in via chat, because now I see that I can do that. I didn't realize I could do that very well. All righty. Are there any other questions or comments about anything? If not, I'm going to upload this to Blackboard. It probably will take an hour or so, and then so the lecture will be there. You guys can go back and review it as much as you want. Have a good weekend, and I will see you guys on Tuesday. I'll send you guys an email with the links to the Tuesday's Zoom office hours and lecture. I'll probably do that later on Monday of next week. Email me if you have any questions at all. Take care, guys.